lecture. Property, plant and equipment, IAS 60. In the last lecture, we have discussed the initial measurement. We have discussed the treatment of dismantling and relocation cost. Okay. So if you have any question from the last class, you can ask. Okay. Otherwise, we will continue with the lecture. And now the next area in IAS 16 or next topic in IAS 16 we are going to discuss is about subsequent expenditures. Subsequent expenditure. Subsequent expenditure means that after initial measurement, let's say, we have purchased an asset on 1st January X1, and the cost of the asset was $1,000, and we are depreciating that asset over 10 years. And now after year 1, the carrying value of this asset is 900. After year 2, the carrying value of this asset is 800. Now, let's say after 2 years, we have incurred some other expenditure or some more expenditure on that asset. And let's say we incur expense of $200 on that asset, and this $200 is consists of $50 repair expense and $150 for some upgradation in the asset. Now, due to upgradation, there will be increase in the production capacity of the asset. Production capacity of the asset. Now the question is that how this subsequent expenditure should be treated. Now the rule is very simple. If due to any expenditure, if there is an increase in the future economic benefits of assets, then the expenditure will be capitalized. Otherwise, the subsequent expenditure will be expensed out in profit and loss account. Now, the repair expense is an expense which does not affect the future economic benefits, which does not affect the future economic benefits of the asset. So the repair expenses are usually expensed out in profit and loss account. But the expenditure of 150 US dollar, which is an upgradation in the asset, and this upgradation has increased the production capacity of the asset. Now, this is the expenditure which has increased the future economic benefit of the asset. And this subsequent expenditure will be added in the carrying value of asset. And when we say added in the carrying value of the asset, that means it will be capitalized. The carrying value of the asset. Now this 150 will be capitalized. So before that expenditure, carrying value was 800. So the accounting treatment is now the asset carrying value will be revised and this 150 will be added and new revised carrying value will be 950. So now we can conclude the subsequent expenditure treatment, and that is the subsequent expenditure will be capitalized. Subsequent expenditure will be capitalized if due to the expenditure there is any increase in the economic benefits of the company. If there is any increase in the economic benefits of the company, then such expenditures will be capitalized. Now, the increase in economic benefit could be in a form of increase in economic life or useful life of the asset. There might be increase in useful life of the asset, or there is an increase in the capacity of the asset. There might be increase in the you can say quality of the product which is produced by that asset. So if anything is happening like that, that means the expenditure has increased the future economic benefit of the asset. Okay. That would be the treatment of future subsequent expenditure. And the rule is if there is increase in future economic benefit, we will capitalize the asset. Otherwise, we will expense out that asset in profit and loss account. Now, after that, the next issue is complex non-current assets. Now, if I give you the example of non-complex asset, then you people will understand it in more better way. For example, let's talk about a ship. A ship is a complex non-current asset. Aircraft is a complex non-current asset. maybe a building, maybe in some situation can be treated as a complex non-current asset. Now, why these assets are a complex non-current asset? Basically, ship seems to be a single non-current asset, but if you focus and you try to investigate, you will find the ship is a combination of different components. Like um, in a ship, you will find a cabin, you will find the propulsion system, you will find maybe a radar, you will find some uh, e- exterior design, electric system, and so on. And every component of this asset is a material non-current asset. And they have different useful life and different patterns of depreciation. Now, this thing makes the ship a complex non-current asset. Same goes with the aircraft. Same goes with some buildings where a building is a combination of gray structure. There are lifts, there are electric system, there is a security system, and many other things. Now, the problem in a complex non-current asset is that we cannot depreciate the complex non-current asset on a single basis. Like, for example, if I take a numeric, let's say we are talking about the Airbus 380, 380 Airbus, an aircraft. Now, the total cost of this aircraft, let's say 1,000 million US dollars. But if we break down this cost is consist of engines of the aircraft. It is consist of the exterior structure of the aircraft, and let's say the another component is a landing gear. There will be many other, but I'm assuming, let's say we have only three components. Out of 1,000, 400 is relating to engines. Let's say 500 related to exterior and $100 million is relating to landing gear. And furthermore, the useful life of each component is different and have different patterns of depreciation. Like engine has a useful life of 50,000 hours. Exterior has useful life of 10 years. And for landing gear, we have 10% reducing ballast method. Now, when I have to depreciate this Airbus, I cannot depreciate 1000 directly. I have to depreciate the each component separately. So when I will calculate the depreciation of E for engine, that would be $400 million divided by 50,000 hours. You will get per hour depreciation. For exterior, you will take 500 divided by 10, so you have a $50 depreciation per year. And for landing gear, 100 into 10%, you will get $10 depreciation. So I have to depreciate each component separately for the purpose of depreciation. And this is known as a complex non-current item. And this is the concept of treating the complex non-current item. You got the idea? Any question? Okay. Now we will talk about major inspection, major inspection cost, also known as overhauling cost. Also known as overhauling cost. Now, what is major inspection cost or overhauling cost? For some asset, it is required by law that after a certain time period, you have to carry out inspection activity or overhauling activity on that asset. If the entity want to use that asset in future to get the economic benefit. Like if I give you an example of airline industry, in airline industry, it is required by the regulators that after certain hours of flying, an inspection will be carried out on the aircraft to check that any component need to replace or repairment or anything else. But that activity is known as inspection cost activity or overhauling activity. And obviously, this activity involves a major cost, major cost. Now the question is, what is the accounting treatment what is the accounting treatment of this overhauling or major inspection? Now, the treatment is number one, the cost will be recorded as a separate non-current asset. The cost will be recorded as a separate non-current asset. And number two, will be depreciated over the period when next overhauling is required. When the next overhauling is required. Now, for example, let's say A Limited purchase a plant from B Limited for 1,200 million US dollar. Before selling the plant, B Limited carried out major inspection cost of 200 million US dollar. Inspection cost will be carried out every 4 years. Plant useful life is 20 years. Now, this is the example. This is the example. A Limited purchased a plant from B Limited for 1,200 million US dollar. And before selling the plant, B Limited carried out a major inspection cost of 200 million US dollar, and inspection cost will be carried out every 4 years. Plant useful life is 20 years. Plant useful life is 20 years. Now, if we talk about the solution, when we have purchased the plant, we will debit the property, plant, and equipment with $1,000, and we will debit the inspection cost with $200, and the bank account will be credited with 1200 US dollars. So here I have recorded the inspection cost separately from plant. And remember, this inspection cost is also a non-current asset under IAS 16. And now, when we will calculate the depreciation, the plant depreciation will be 1000 divided by 20. And that will be $50 per year. And for inspection cost, we will depreciate it over the next overhauling period. And let me change something so we do not confuse. So let's say inspection will be required after 5 years, not by 4 years, by 5, after every 5 years. Now this 200 will be depreciated over 5. So the depreciation for inspection cost will be 40, and for plant it is 50. And now I will record it. Debit depreciation $90, and we will credit the accumulated depreciation by 90. So the depreciation for plant, let me recalculate, will be 1000 divided by 20. So it will be 50. And the depreciation for inspection cost will be 200 divided by 5. It will be 40. So total depreciation is 90. Okay. And that would be the recording of a depreciation. We will debit the 90 million US dollar depreciation and credit the accumulated depreciation by $90. And the carrying value of the plant will be now 1200. In balance sheet, I will show the total 1200, which is consists of 1000 value of the plant and 200 of inspection cost, and minus the accumulated depreciation 90, in which 50 is consists of the plant and 40 of inspection cost, and the total carrying value will be 1110. Okay, got it? Any question? Now let's talk about accounting for spare parts. Accounting for spare parts. Now you are already familiar that what is meant by the spare parts. Dear student, when an entity purchase the spare parts, initially they will record it as a inventory. It will be their inventory to be used in their non-current assets. And when they will use it, when they will use it, when they will use the spare part, then the accounting treatment will be decided. Now, if usage of spare part is a useful life less than a year, then normally it will be recorded as an expense in profit and loss account. But if the life of the spare part is more than a year, that means it will provide future economic benefit, then spare part will be added in the carrying value of asset. Means it will be capitalized. Means it will be capitalized. So this will be the treatment of the spare parts. Okay, now we are going to talk about subsequent measurement. Now we're going to talk about subsequent measurement. Now, dear student, initially the non-current asset, property, plant, and equipment are measured at cost. And after the initial measurement, in subsequent period, you can say at the end of the reporting period, company need to decide that what would be the subsequent measurement which they will use. Now, in subsequent measurement, the entity have two choices, or you can say two options. One option is to continue to use cost model, and option two, they can use revaluation model. The cost model means that under the cost model, their base will be the cost of the asset. And under revaluation model, the base of the asset will be the fair value, or you can say the market value. Under the cost model, the carrying value will be equals to cost less accumulated depreciation minus accumulated impairment. That would be the carrying value of the asset under the cost model. Like we have purchased an asset for $1,000, we depreciate it over 10 years. So after 2 years, cumulative depreciation would be 200. So 1,000 minus 200, carrying value is 800. Now this carrying value is measured under cost model. The base is the cost. Under revaluation model, when we determine the carrying value of the asset, that is equals to revalued amount. That is equal to revalued amount. Revalued amount means fair value or market value. And less revalued amount less subsequent accumulated depreciation. Revalued amount less subsequent accumulated depreciation. Subsequent accumulated depreciation means the accumulated depreciation which we have after adopting the revaluation model. This subsequent accumulated depreciation does not include the accumulated depreciation before we have revalue the asset. So the previous depreciation, which is before the revaluation, we does not consider in a revaluation model. So we can use cost model or we can use a revaluation model. We have the choice. Under cost model, carrying value will be equal to cost less accumulated depreciation minus accumulated impairment. And under revaluation model, where we will carry the asset at a market value, the carrying value will be equal to revalued amount less subsequent accumulated depreciation, first of all. And obviously, when we will use the fair value basis or market value basis, then obviously there will be another thing which will be a gain or loss. So we need to learn also that what would be the treatment of the gain or losses on the revaluation model. But before that, just remember, if a company want to use a revaluation model, then there are certain conditions which should be fulfilled. If a company wants to use a revaluation model, those conditions should be fulfilled. Otherwise, the company is not allowed to use the revaluation model. The first condition, fair value is reliably measurable. That means we have a market where we can find the buyer and seller, and from that market we have a fair value that is not influenced by entity specific factors. Fair value is reliably measurable only if it is determined by the independent forces. So the fair value should be reliably measurable. Condition number one. The other condition is whole class of the asset must be revalued. Whole class of the asset must be revalued. Now, what does this mean? That whole class of the asset must be revalued. Dear student, now for example, in a property, plant and equipment, one class of the asset we have is property, let's say. Another class of the asset we have vehicles. One is we have furniture and fixtures. Similarly, one class we have plant and machinery. Let's say we have four classes of the asset. Now, if we want to revalue one of our property and we have 10 properties, then all the properties must be revalued. You can't revalue one property and you can't keep other 9 properties under cost model. If you want to use a revaluation model for a one property, you have to use it for all property. That means the whole class of the asset must be revalued. But this is possible. You can use revaluation model for property class and you can still use cost model for vehicle, furniture, and plant and machinery. But if but within the class, you have to revalue all the assets available in that particular class of the asset. And condition number 3, revaluation should be carried out frequently so there is no material difference between market value and carrying value. That means if you are using the revaluation model, you need to ensure that the carrying value, the value at which you are carrying the asset in a financial statement, and the market value are not materially different. If there is any material difference between them at any particular time, then you need to revalue the asset again. So you can keep the carrying value and market value on the same page. So these are the 3 conditions which entity need to fulfill if they want to use a revaluation model for their property, plant, and equipment. If they cannot fulfill these conditions, then they will continue to use the cost model. Then they are not allowed to use the revaluation model. Got it? Now, before we will discuss the other aspect of the revaluation model, let's have a quiz. So this is the first question. Uh, Please let me know the answer. Calculate the answer and let me know the answer that which option is the right option. I am waiting for your response. Option C is the answer. Okay, let me check now. So 48,000 is the cost of the plant. 448, yes. Option C will be the answer. ABC has revalued its property for the first time this year. Management proposed to expense depreciation based on original historical cost to profit and loss. Depreciation based on original historical cost. And they are using the revaluation model. Now, dear student, when you are using the revaluation model, you cannot calculate depreciation on historical cost. You have to calculate depreciation on revalued amount. So it is not allowed. It is not allowed. We will discuss the revaluation model more in detail, but it is common sense that if you are using the revaluation model, then the depreciation will be based on the revalued amount, not on historical cost. In cost model, we base the depreciation on historical cost. In revaluation model, we base the revaluation or depreciation on revalued amount, not on historical cost. So Thames depreciate non-current asset at 20% per annum on reducing balance basis. All non-current assets purchased on 1st April X2 and the carrying amount on 31st March X6 is 20,000. The question is, what is the accumulated depreciation as at 31st March X6? Now, let's say we have this time series. Asset purchase on 1st April X2 and this is 31st March X6. They have cost of any cost which we have does not know that at what cost they have purchased it. But after the first year, which is 31st March X3, the carrying value would be the 90% of the cost. Keep in 80% of the cost, not 90, 80% of the cost. They are using reducing balance. Then on 31st March X4, the carrying value would be 80% of the previous carrying value. They are using reducing balance. Then on 31st March X5, that would be 80% of previous carrying value. And then on 31st March X6, the carrying value is 20,000. And this 20,000 is 80% of the previous carrying value. Okay. So year 1, 2, 3, and 4. So it's been 4 years that we have purchased this asset. Now the question is that what is the accumulated depreciation nearest to zero at 31st March X6, 31st March X6. And the carrying value of the asset is $20,000. $20,000. Now, if you want to calculate the carrying value at 31st March X5, what you will do? You will take the carrying value of 20,000, and this 20,000 is the 80% of the carrying value, which was at 31st March X5. So if you divided it by 80% and multiply it with 20%, you will find the carrying value at 31st March X5. And what would be that value? Can you solve it? 20,000 divided by 80 into 100, into 100. Just a minute. Into 100. Into 100. Divided by 80% into 100. You will find the carrying value at 31st March X5. What is the answer? 20,000 divided by 80 into 100. Yes, students. $20,000 divided by 80 into 100. That was 25,000. So on 31st March X5, the carrying value was 25,000. And they take 80% of it and they have 20,000 at X6. Now, similarly, the carrying value of X5 is equal to 80% of the carrying value of X4. So again, divided by 80, multiply by 100. The carrying value at 31st March X4 was 31,250. And if you take 80% of it, you will reach at 25,000. You will reach at 25,000. Now the carrying value at March X6 is 80% of the carrying value of X3. So at X3, the carrying value is 31,250 divided by 80 into 100. So that is 39,063. Now this 39,063 is 80% of the cost. Is 80% of the cost. So the cost of the asset on the date of purchase was 48,828. 48,828 is the cost of the asset. So you purchase this asset at 48,828 on 1st April X2. Then 80% at 31st March X3 is the first carrying value. Then at X4, 80% of the X3 carrying value, and X4, X5, 80% of the X4 carrying value, and X6, 80% of the X carrying value. That is basically reducing balance. Now we know that carrying value is equal to cost less accumulated depreciation. Now you know that at March X6 carrying value is 20. Now we know the cost as well, but we does not know the accumulated depreciation. So we can rearrange, and accumulated depreciation will be 48828 minus 20,000. And you have 28,828 is the answer. And there is no option in this question, which is 28,828. And let me tell you, this is a mistake in this question. There should be an option which should be 29,000 nearest to the 1,000. If there is any option of 29,000, I would have chosen that option. But this question, in this question, they have did the wrong calculation and they have choose the option B. Let me tell you. But that is not the right answer. That is not the right answer. The right answer is 28,828, of which nearest is 29,000. So there should be an option of 29,000. Okay. And let me tell you, this is not the way of calculation which they have did is not correct. They have chosen 19,000, and I will show you at the end that why that 19,000 is not the right answer. But keep in mind this calculation. So tell me the answer of question number 4. Treatment of major inspection cost. It will be recognized as an asset and will depreciate over the next overhauling period. So option D is the answer. D is the answer. Option D is the answer. A, B, C are not the right answer. D will be the right answer. We will record it as an asset and will treat it as a separate asset for depreciation and will depreciate it over 5 years when the next overhauling is required. Now, the P purchased a lorry on 1st October X5 for 200,000 and is being depreciated on monthly basis over 5 years, assuming no residual value, assuming residual value of 10,000. And then on 1st January X6, accordance with the environmental legislation, they had to fit an emission analyzer in the lorry, which cost 8,000, and the analyzer has a useful life of 10 years. Now, they want to know the carrying amount of the lorry. So, lorry has two components. One is itself, which is 200,000, which will be depreciated over 5 years. And residual value is 10,000. So, $200 minus residual value divided by 5. October, November, December, 30 June. So 9 months depreciation will be recorded, which is 28,500. The next component is an analyzer, which is 8,000 and useful life of 10 years. And they have installed it on 1st January. So 6 months depreciation will be charged. and that would be 400. So total depreciation will be 28,900. And the cost of the lorry is now 2,08,000 minus 28,900. And your answer will be option A will be the answer, 1,79,100. Now, look at this question. I am telling you, this answer is not the right answer, which they have chosen, 19,000. And the reason is, the asset has been purchased on 1st April X2. And the carrying value of 20,000 is given on 20,000. 20,000 is given on 31st March X6. So it means 4 years we have purchased the asset. So it will be carried back till 1st April. But in this solution, they have carried it back till 31st March X3. And here they are on mistakes. They need to carry it back till 1st April X2, where the cost will be 48,828. This is the original cost. And from this original cost, when they will deduct the carrying value, they will have the right accumulated depreciation. But they are taking 39,062, which is the carrying value or at the end of the first year. And if you deduct the carrying value of the first year from the carrying value of the last year, you would not find the total accumulated depreciation. Basically, you need the cost. You need a cost, and then from that cost, when you will deduct the cost, you will deduct the carrying value, then you will find the right accumulated depreciation. So that's why the option B here is not the right option. The right option is 28,828, which is close to 29,000, which is not available in the answer option. Got it? Any question? Yes, students, any question? Okay. Okay, students. Okay. Okay, students, we have started the revaluation model. We have discussed the conditions which need to be fulfilled in order to use the revaluation model. Okay, now we will left the calculation of gain and loss and other aspects in terms of calculation. But that aspect I will discuss in the next class. Today I will finish the class early because there is some um, important work which I need to carry out. So today we will finish the class early. In next class, we will discuss the gain loss statement of under revaluation model, disposal of the assets. We will discuss these topics in the last class, and we will complete the IAS 16. So goodbye for today, and see you in next week. Okay, thank you very much, and see you next week.